Nadia Al-Bilasi in Dubai. She's a senior market analyst at Equiti Group. Good to have you back on the program, Nadia. Now, Asia's manufacturing powerhouses are both in decline. Is demand for Asian goods falling?
Good morning, Taiba, and Happy New Year. Good to be back. I guess let's take it step by step. So in China, I guess demand is still falling. We have a case of disinflation. We had the manufacturing data this week that slumped. It was weaker than expected. Last week, the services sector was better than expected. So the mixed data kind of gave mixed sentiment, but still Asian equities were tracking a subdued Wall Street sentiment coming from Wall Street, closing the year on a little bit of lows. Despite the remarkable gains that we saw, was a good year for stocks in 2024. However, the pressure on Asian markets will be mainly from the U.S. tariffs that Trump, when he takes the office, he will place on these imported goods, and this will then really highly affect Chinese goods mainly. I think universally we're stepping back away from how it will affect other goods, but I think our main focus will be on China, and still, because we're still in a case of disinflation, we will be taking this obviously to this year, and this will still affect equities.
Right, and on the equities front, we seem to have missed a Santa Claus rally this year. What's to come in the year ahead?
I guess we saw a little bit of uptick in the markets just ahead of the Christmas holidays, but I think the pullback was necessary because we've seen a rally so far this last year, 2024. It was a great, remarkable year for major indices, whether it's the S&P 500 or the NASDAQ. I think the S&P 500 gained more than 20%, as well as the NASDAQ 30, more than 30%. The Dow Jones as well. So I think we are going to continue with highs for 2025. I think the only things that may affect or set for pullback measures are Trump's policies, because they're a little bit more aggressive, and the uncertainty that comes with it makes investors wonder or stay a little bit more cautious. And also the slower pace of interest rate cuts that we're going to see, that will also have its own implications on equities movements. I think these are the main two things that we are mostly cautious of, but I think a pullback is necessary, especially after a case of no Santa Claus rally, and we will continue with this correction phase that we are seeing now.
Right, we will have to wait and see how this all plays out. Nadia Al-Bilasi, Senior Market Analyst at Equiti Group, thank you very much for your analysis.